The markets, Dow Industrials nearing a record high, another choppy trading session. Let's take a look at big tech stocks. Most are paring losses, trying to shake off inflation worries, but Apple is down roughly 3%. And checking in on the 10-year Treasury, on pace for a 13-month high on the yield. It's below that 1.6% mark on the 10-year yield, but still troublesome for stock investors. The market's seeing some positive trends on the vaccination and economic front in a week that marks 1 year since the global pandemic. Let's first get to Capitalist Pig hedge fund manager Jonathan Hoenig and Annandale Capital CEO George See. Welcome, both you gentlemen. Jonathan, what do you make of these markets? The reaction certainly to high growth stocks and the higher yield on the 10-year. Do we continue this pattern of selling off in stocks, higher yields on treasuries?
Well, yeah, Dagan, we're seeing something we haven't seen in the markets really for a long time. That is lower tech stocks, as you said, and higher interest rates, higher bond yields. I mean, Apple's gone from 140 to 117. Tesla's gone from 750 down to 580. At the same time, interest rates, as you said, have been 13-month high. The 30-year has nearly doubled. And I think that's a reason for caution. And it's beyond even anything fundamental. It's really about liquidity. Why do I know that? Because I'm also seeing gold selling off, even in the face of higher inflation and higher interest rates. So, Warren Buffett said it best in this case, Dagan. He talked about liquidity being the test to see who's naked when the tide rolls out. I think now's a time for caution. You're seeing the tide roll out.
George, how do you see it? No pun intended, sir.
Good morning, Dagan. I think it's pretty clear that this long-expected rotation from mega-cap tech stocks and speculative growth stocks into value stocks and cyclical stocks, which will benefit greatly from this stimulus-induced high we're going to get in the economy the next 6 to 9 months, is real and has legs. And that's exactly what's going on right now. You do have a significant sell-off in the tech stocks, but you look at the Dow today and it says full speed ahead for the economy and for the stock market, both. It's just investors are going to have to be more balanced in what they hold in their portfolios and not be so focused on growth stocks, which they have been for years.
To that point, Jonathan, if you're worried about inflation, owning stocks is not a bad investment, not a bad decision in the sense that companies can raise prices to a point, and it gives you that inflation hedge. Do you see it that way?
Yeah, I mean, he's absolutely right. There are areas of the market that are performing well that haven't done well in a long time. Value, even a lot of the financials. So more than anything, I think now is the time for diversification. But, names like Tesla, names like Apple, they become so ubiquitous that it's almost hard to avoid them. They become such large and dominant parts of all the major indices. So you have to look under the hood. Value, emerging markets, and absolutely financials are three areas to consider at this point in your portfolio.
George, how high is too high on the 10-year yield? My entire adult life has been interest rates falling. And I mean longer-term Treasury rates falling. If you go back to when I was in high school, that's been the case. And at some point, I think people thought it was going to happen years ago that it would reverse. But at some point, it will. And so how high is too high on the 10-year yield, at least in the short run?
In the short run, above 2 is too high. That would result in a major sell-off. In the long run, it's much higher than that. I can remember when the 10-year was at 17% in 1980, so we're nowhere near those kind of numbers. So this is a short-term overreaction. And I would go back to what Jonathan said and say that statistically, academic research shows that in periods of rising interest rates and inflation, commodities perform the best, real estate is second best, and general equities are a distant third. So people who have the opportunity to own some commodity stocks and real estate stocks, this isn't just a trade, it's an investment for the next couple of years.
Yeah, people always say that, and I know Neil says it too I remember when when it was a double-digit mortgage rate or double-digit 10-year yield, but like a $17 million house, tiny little Victorian house for sale out in Aspen, Colorado, that house sold for $75,000 when the rates were double digits. So there's a big price change that needs to happen if rates go back to those levels. But in the short run, not happening. We'll see you shortly, both of y'all. Jonathan Hoenig and George See. We'll bring you back just a little later. The other
Thanks,
top
Megan.
story, the CDC just unveiling its recommendations for what fully vaccinated people in the U.S. should and shouldn't do. Fox News correspondent Jonathan Seri has the latest. Hey, Jonathan.
Hi.